Trump's economic strategy involves pushing for low oil prices, low interest rates, and low inflation in the U.S. He plans to achieve this by utilizing the country's energy resources and pressuring Saudi Arabia. Additionally, Trump wants the Federal Reserve to lower interest rates, and his administration has already started applying pressure on the Fed, signaling potential conflict with Chairman Jerome Powell throughout the year. Economists are now predicting higher inflation in the U.S. after Trump's election, with the Consumer Price Index (CPI) rising by 2.9% in December, which is above previous expectations. The impact of tariffs is also anticipated to contribute slightly to inflation. At the same time, GDP growth for the fourth quarter of last year has been revised upward, with forecasts now showing growth between 2.5% and 3%, indicating stronger than expected performance. BlackRock's Larry Fink has expressed optimism about the economy but warned that Trump's policies, including large-scale private investments and tariffs, could eventually push inflation higher. If this happens, 10-year Treasury yields could surpass 5%, potentially causing a market shock. Meanwhile, Japan is expected to raise its interest rates today. The CPI came at 3.6 year-over-year compared to 2.9 last month. Even core CPI came at 3.0. It was 2.7 last month. However, the country is taking a cautious approach, carefully communicating with the market to avoid any disruptions. While this rate hike may not cause immediate upheaval, there's concern that a continued rate increase by Japan could trigger broader economic consequences in the medium term. The broader global picture suggests a potential tipping point. As the U.S. pressures for lower rates, Europe struggles with weak economic conditions, and Japan takes a gradual approach to rate hikes. This combination could create a market shock or economic disruption in the future.